And we're live here, everywhere. Good afternoon, everyone. This is Roman Shershire with your first 2026 edition of Buy, Invest, Sell, Broker's Formula for Real Estate Success. Hope everybody had a great New Year's. We did. And it's today, the 9th of January. We have a lot to go over. And especially today, President Trump came out with amazing news today, and I can't wait to go over it. I'm going to discuss that. I'm going to talk about which metros are most likely to see price drops in 2026, which metro cities. As I go through this, please, guys, if you like this video, share it on social media, tap the share button, send it to your friends and family. Greatly appreciated. And to anyone watching on Instagram, head over to Facebook or YouTube after this to see the links to the slides for today's content. Now, please keep in mind, I've bought and sold hundreds of properties throughout the country, between Florida and here in Southern California. I put all my best tips and tricks into a book that I published. I give it away to our clients, the actual book form, and I'd be glad to give it to you for free, an ebook version. Just hit me up, DM me, text me, whatever you want, on free tips and tricks on what the pros use, people who buy hundreds of properties, what they use to purchase and save hundreds, if not thousands of dollars, if not hundreds of thousands of dollars on their purchases and bulk purchases of properties. Hit me up to get your free ebook copy. All right. Current projects, we got a lot going on. It's already been a very busy month of January. December was dead. December was very slow across the whole industry. Most people were camping out, taking vacations. There's just not a lot of transactional volume. In fact, we're down transactionally throughout the country year over year significantly. But January is already heating up. We got 4 lease listings. I got an acceptance on a new fixer property in Jacksonville. We're talking to a new listing, and we got new buyers that are chomping at the bit. They've been waiting for so long, and today's news makes it even more advantageous to jump into the market and buy these properties. Right now, it's a little bit slow still, and you can get great deals if you know what you're doing. All right, so let's go ahead and jump right into our content. I have a lot to go over with you guys. Let's start with the new map that's predicting exactly which cities, which metro cities are going to go down in price. Now, Newsweek put out an article specifically on which home prices, which cities will price drop the most in 2026. The top 10 forecast decliners are Cape Coral, Florida, dropping over 1/10 of its value in the next year. Northport, Florida, I don't even know where that is. Southern Florida somewhere. Southwest has been hit pretty bad in the last few years. Tampa, Tampa's a big metro. Raleigh, North Carolina, and we have 3 cities in California that made the list. Stockton is one at 4% drop. We have Sacramento and San Francisco are all forecasted to see price drops. Now, LA and Jacksonville are not named among the decliners. They're not expected to be sharp falling markets in 2026. And I've been showing you where in Los Angeles, just because of the amount of demand here, we had a drop in transactional volume like the rest of the country has, but people are not, we're sitting on a lot of equity here. And so people are saying, oh, I'm not getting the price I want. I'm going to take it off the market. But and for that reason, prices have not dropped. One thing that is a certainty in all the previous major price drop years, 2008 through 2012, 2003, we saw price drops in the 90s. The main factor in those price drops were there were a ton of foreclosed properties, And those foreclosures drove a lot of the price drops. They were dilapidated houses. The maintenance had stopped on it, and it was a big problem. In the last turn down in 2010, up to 70% of the properties on the market were foreclosures. Up to 70%. We are barely scraping 1% in terms of foreclosures that are out there, because a lot of people are sitting on a lot of equity, and so they're just not getting foreclosed. They could just refi, and a lot of people are doing that. All right. Let's move to the big news of the day. The big news of the day is that President Trump came out and instructed Fannie Mae and Freddie Mac to buy back $200 billion in mortgage debt, okay? Mortgage bonds. What does this mean? Well, what this means for your average purchaser, when the federal government or Fannie or Freddie Mac are out there buying loans, what that does is it creates more demand for mortgage-backed securities. And with more demand, prices go up, and there's an inverse proportion of price and yields in the bond market, okay? And so as prices go up, the rates, the yields drop on these mortgages, and so it creates a squeeze between the 30-year rates and the 10-year treasury bonds. What this means is that rates will fall, and they already have. Now, why? Why is it such a big difference in one day? Well, $200 billion that the president has instructed Fannie and Freddie to go out and purchase. If you'll notice this, that Fannie and Freddie have slowly been purchasing billions of dollars in mortgages, and since May, they've stockpiled. They've added more than $55 billion in mortgage principal balances to their holdings. $55 billion. Well, in one day today, the president has instructed them to buy 4 times that amount quickly. And what has it done to rates? Let's take a look at where the rates are. The major effect is on the rates. The rates dropped significantly. When I was putting together this weekly update, the rate had on the 30-year fixed loan had dropped to 5.99. You could see here it dropped 15 basis points today, but earlier today it had dropped 22 basis points to 5.99%. You can see that it's rebounded a little bit. Now it's at 6.06%. When I did the update back in December, about a month ago, our rates were at 6.24%. So that was a 25 basis points, a quarter point drop in a month from December to today. And it, of course, has gone up back up 0.7 basis points. So still a 0.18 basis point drop since the last time we delivered our update. The 15-year fix went from 5.76 to 5.55. It's rebounded now to 5.59. That is a 17 basis point decline. The 30-year jumbo went from 6.39. It's now at 6.35. Okay. So the jumbo was already kind of low, and it's declined another 4 basis points. The FHA went from 5.86 to 5.63, or now 5.69. Still a 17-point drop. Pretty big drops. All right, let's go to our quote of the day. Chance favors the prepared mind is the quote. Basically, what he's saying is preparation wins. Okay, and applying it to our business, have your approval, have your comps, have your repair plans dialed in, so that when rates dropped, or you're dealing with a motivated seller and he blinks, or let's say that you lost out on that property the first time, but we stayed in the game and the buyer bailed out. When we're prepared to jump and prance at this property, we're going to get it. We're going to get it at a great deal, and we're going to negotiate the best terms possible, but only if we are prepared, because chance favors the prepared mind. Louis Pasteur. All right. Thank you for joining us for the first weekly update. the buy, invest, sell update, first one of January. I appreciate you guys sticking with us. I wish you an amazing 2026. Really excited about what this year has to offer, the opportunities that are present. We have not seen such opportunities in a long time, and I'm jumping into action. Already got one acceptance. We got one property coming to market in Jacksonville. We're looking to buy here in Southern California, and always here to help. Right now is the best time to pick up properties. I haven't seen such a good time to pick up properties in quite a few years. So if you're thinking about it or sitting on the sidelines, call me. Let me just tell you the opportunities are out there. Like I'm getting right now sub 5% rates for our clients with rate buy downs. So you don't even need to wait until the rates fall. You can get those rates today and then refinance in a year or two when the rates are actually at those rates for the long term. All right. Thank you for joining us once again. Please remember to share the information with your friends and family. Hit the share button, share it. We'd love to get our views up. Some of our clips are reaching 1,500 views, which for such a small little real estate niche update, I'm flattered, appreciate it. Everyone have a great week. This is Roman Share, your number one online resource for buying property.